Hello, and welcome to this annual update on the Baillie Gifford China Growth Trust. My name is Linda Lin, and I am one of the core managers. The trust aims to deliver long-term capital returns by investing in growth companies in China. Across our teams in Anbar and Shanghai, our focus remains on identifying the companies in China with the best potential to compound earning growth over many years, and we owning them with patience and conviction. Over the 12 months to January 2026, the portfolio has delivered a second consecutive year of strong absolute performance for our shareholders, and it also outperformed the relative index. It was a year that China's macro drop continued to evolve, and the process has been uneven. But the market has increasingly rewarded the corporate fundamental improvements and innovation-led growth. And our portfolio has captured that strength particularly well. In 2025, China delivered a steady but distinctly two-speed expansion. Exports and industrial activities were strong despite the tariff disruptions, while the property sector continued to be a drag and the consumption was soft. It was also a year in which the innovation gains more momentum. In AI, for example, the emergence of tools such as DeepSeek and the rapid adoption of the generative application underscore the speed of the Chinese ecosystem's evolution. In our view, the big picture here is that China is under a multi-year transition from property-led model towards one driven more by productivity, advanced manufacturing, technology, and new forms of consumption. And that shift is important for where and how we invest. At the core of our portfolio, there are four key themes: technology platform empowered by AI, distinctive consumer franchises, advanced manufacturers, and energy security and transition. During the year, we made a number of deliberate changes. We add new holdings such as Minimax, an AI lab from China. We also added RedNote, a consumer internet platform at the intersection of social discovery and commerce. This is our second private holdings alongside ByteDance. Despite the overall consumer sentiment was soft, we continue to see a structural shift of the consumption preference on the ground. Consumers now in China are spending more on the activities rather than just buying goods. For example, in entertainment, food, and travel. We rotated into a few new names that could potentially benefit from this trend. For example, Anta, a sportswear brand, and H-Road, a hotel chain in China. We continue to hold our core positions in leaders in the new energy transition, including the battery maker CATL. But we also expanded to new holdings in hydropower and the traditional energy producers. Meanwhile, we also made selective reductions. We trimmed a number of our holdings in the semiconductor and robotics industries, as the shares has been significantly re-rated, and we decided to take some of the profit to fund our new ideas. We also made some reduction in Meituan, as the local competition is getting worse. Overall, the portfolio remains focused on the companies with strong execution, durable competitive advantages, and also a clear path to benefit from the new growth drivers we think will shape China's next phase of development. As long-term stock pickers, we also would like to emphasize that investing in China requires patience and a willingness to accept short-term volatility. Macro process is uneven, and the geopolitics are complex. But we also believe the opportunity in Chinese companies remains compelling. What changed over past year is that the innovation is becoming more visible in the real economic activity. AI in particular is moving from the labs to deployed across platforms, software, devices, and industrial systems. Considering the scale of China, we believe that will create meaningful opportunity for a number of our holdings. The macro backdrop is still mixed, and we don't expect there's a dramatic stimulus-led rebound. But the policy is becoming more supportive, and the confidence may gradually improve, and the valuations remains attractive related to global markets. For long-term growth investors, that combination continues to offer a favorable starting point. Thank you for your continued support of the China Growth Trust. For more details, please read the latest annual report and the manager's report on our website. And we look forward to seeing many of you at the next AGM.